Hello and welcome. Is the British pound set for a major drop, or is a massive reversal just around the corner? The market is buzzing with activity on GBPUSD, so let's break down the charts and find out what could be next for cable. Right now, the prevailing mood in the market appears to be bearish. We are seeing a significant number of analyses pointing towards a continued downtrend for the pair. Looking at the daily chart, there's a clear rejection from last month's high, with many traders anticipating lower prices. The momentum is decidedly pointing downwards after failing to hold higher ground. Drilling down into the shorter timeframes, specific selling strategies are taking shape. One analysis highlights a strong resistance level around 1.3545, setting a potential take-profit target all the way down at 1.3375. Another chart reinforces this view, identifying a key resistance zone near 1.3628, with moving averages crossing over to signal further potential declines. With the price already breaking below the 1.3500 handle, the case for the bears is gaining strength. This technical weakness is also underpinned by fundamental factors, with talk of a GDP slump putting pressure on the pound. But it's not entirely a one-way street. A more complex, long-term perspective suggests that a major turning point could be approaching. One detailed forecast maps out what it calls a battle zone for buyers, located between approximately 1.3370 and 1.3470. The theory here is that while the price may dip into this area in the short term, it could represent a significant long-term buying opportunity. This idea is supported by another view that the pair is entering a major weekly demand zone, a point where selling pressure often gets exhausted and buyers begin to step back in. So let's summarize the key takeaways. The short-term pressure is definitely to the downside. The bearish scenario is compelling, with key resistance levels holding firm and technicals pointing towards lower prices, potentially targeting the 1.340 level or even lower towards 1.3375. However, the crucial area to watch is that broad support zone between 1.3370 and 1.3470. A strong price reaction in this zone could be the first signal that the bears are losing control, potentially setting the stage for a significant reversal. It's a classic conflict between short-term bearish momentum and a powerful long-term support level. As always, trade smart and manage your risk. Thanks for watching.